Hey guys, I hope that all of you are doing great and welcome in this video. So today we will talk about how to actually invest your money in period of massive uncertainty on the markets and what you can actually do to protect your capital and what are the different strategies that you can put in place to make this happen. So I'm going to share with you guys 3 different strategies that are extremely powerful, and the last one that I will share with you guys is literally the most important one, so you have to stay until the end of the video. So just before that we start, make sure that you leave a like on the video as well. I would really appreciate it, guys, and honestly it would just help me grow the channel even more. And make sure that you are subscribed as well to the channel if it's not already done. So as I said, today I will share with you 3 strategies that are very powerful, and you will understand how they work together in order to get the best consistency possible in your results. And the first thing that I want to clarify before getting into the strategies themselves is simply that during periods of crisis, during periods of recession and uncertainty on the market, these are literally the best time possible to actually accumulate assets as prices go down, and it's literally where fortunes are made. Okay, periods of crisis tend to lead to amazing opportunities, and only the people who are prepared for them and who have a good plan in place will be able to profit from these opportunities, and these could literally change your life. Okay, so it's extremely important to understand this video because we are currently during one of these periods of massive uncertainty in the world, and only the people, as I said, who truly understand the situation and who know what they can put in place to actually create wealth, right, will be able to survive and most importantly thrive in this environment. Okay, so let's get into it right now. So first of all, the first strategy that you can do is very simple, is to simply wait for a massive crash on the market. Try to time the low and then get in the position to ride the move to the upside. Now there are pros and cons of this strategy, right? So the first big win for this strategy is simply that if you are actually able to time the low correctly on the market and then you see the market going back up, well, you can easily make 20, 30, 40, 50% return on investment quite quickly as well, because normally when the market bounces to the upside, right, it tends to be pretty aggressive and it makes a fast move. So this could be really interesting. Now, the problem with this strategy, right, is simply that it's really hard to time the low, right? Even for me, who has been trading for about like 8 years at this point, right, I would not always be able to do this, right? Simply because there are always multiple levels that could be respected by the market. And even if you use fundamentals and technicals, it is still quite hard to actually find the optimal level where the market will stop and then go back up, right? So it's not a certainty that you will be able to find this level. And so the problem is that if you don't get the level right and then the market bounces before that you are in the position, then you are left alone essentially with no trade on the market, and you will need to find another way to get in the trade after the big bounce already. So it becomes less interesting, right? So it's a strategy that has big pros but big cons as well, right? So it's literally an extreme, either that you do amazing or that you do absolutely nothing at all, right? And so this strategy alone might not be that interesting, but it could work very well with the 2 other ones that I will explain you guys, and you will see how, as I said, all of them will work together at the end. All right, so that was the first strategy. Now the second strategy, and we're already getting now to something that is extremely interesting and that I do personally as well. It is what we call DCA, so dollar cost averaging. And so essentially what that means is that no matter what the market does, no matter if they go up, if they go down, if they go sideways, right, you will simply invest a certain amount of money that you can allow yourself to invest every single month without any research, without any analysis, without any reason or whatsoever, right? You will literally just invest money every single month. Okay, that is the strategy and is as simple as that, right? And the reason why this works well is because, as I said, right, especially if we are during a period of uncertainty on the market and a period of crisis, then you will be able to constantly buy assets at cheap prices. right? So if the market is down 20, 30, 40, 50%, then you will be able to accumulate during these times. And even on the short term, if let's say you buy, the S&P and then it goes down, of course, on the short term, you could lose money, right? But you don't really lose this money if you don't take it out, right? And so essentially the idea is that the more a correction keeps on going, the more that you will get into the market, as I said, on a monthly basis, for example. And so what this will do is simply that you will accumulate a lot of positions. And then at some point, when the markets will go back up, all of these positions will be in profit. And on the way up, right, your money will just grow exponentially, right? And that is literally one of the best strategies that you can implement because it's been proven to work for a very long time. It doesn't require much money to do because even if you don't have a big capital, you can still do it every single month, right? So you can, look at what is your income, you can look at what are your expenses, try to see what you can save up from this, and then invest this money after that, right? And so it doesn't take a lot of time as well because literally, as I said, you don't need to do anything with this, right? Literally, you just need to, have a automated deposit, for example, in a investment account, and literally that's it, okay? So you don't even need to have any knowledge, any experience, nothing, related to trading, right? Or whatever, and you can literally do this and perform well over the long term, right? All you need to make sure of is that this is the money that you are comfortable with investing and that you are comfortable seeing it go down in value because, as I said, you will accumulate during these periods of crisis. So it could be, maybe stressful for some people. And that's the reason why you need to only invest money that you don't really need on a daily basis, right? And then after that, over the long term, if you are able to maintain these positions, then this could work very well. And as I said, this is something that I do myself personally. It is a really good strategy that I've implemented already in my life and that I will keep doing for the very long term. And I know that this will work very, very well. And the third strategy is the one that I've focused a lot in the past couple of years, which is to simply learn how to trade, right? Because that literally is the best strategy for me, at least, right? And the reason why I say this is simply because I've been able to outperform the markets overall by quite a lot, and it's been very, very profitable. So to give you guys an idea, right, in the last 6 years that I've been trading with a live account, I've never had a losing year, first of all, so I've always been profitable, and it's the same thing with 2022. And essentially, right, my results were anywhere from 5% to 80%. So of course it varies a lot, and that's part of the game. It's completely normal. But if we were to make an average, I would say that it's probably anywhere between 30 to 40%, which is quite amazing if you compare it to the overall markets, which on the long term could give you 8 to 10%, right? So it's of course the best way that I found to actually do it, right? And this is what works for me. Now, of course, trading is in itself a business, right? It's a skill that you need to learn, and that it takes more time to manage. It takes a lot of time to learn as well. You need to have quite of a decent capital to be able to do it the right way, right? So it's not as easy as, for example, the second strategy, but it is something that is even more interesting. And so the point that I wanted to bring you guys in this video, right, and that's kind of what I explained at the beginning, is that for me at least, and again, right, I talk about my own situation, but I think it could be really valuable for you guys, is that I simply do these three strategies, okay? I do them at the same time, and that's the reason why I have a lot of consistency on the market. And what I mean by that is that, of course, even if I'm a full-time trader, even if I've been doing this for a long time, I don't have all my money invested in my trading account, okay? That's really important to understand. I don't have 100% of all my money in my trading and trade this, okay? It would be a bit too risky, and it would be a bit too stressful as well, okay? So I have quite a good portion still of my money in my trading account because I have a lot of experience. I'm very confident in what I do, and I know that I can successfully grow this amount of money over time, but I don't have all my money in there. What I also do is, as I said, dollar cost averaging. So on a monthly basis, I will accumulate different assets that I believe in to be interesting over the long term. So I will, just put more and more money into these things. And then I also have very long-term investments, right, that I will just let there grow for quite a long time. And then I also have money on the side, right, liquid money, that if we ever get a massive market crash and we go down quite a lot, I will be able to massively buy at what I think could be the low and then see a market reversal. Now, as I said, I might not be able to time the low perfectly, but overall it doesn't matter that much because it's not the main strategy. It's not where all my money goes. So even if I try to time the low and then it goes back down, right, well, I can reinvest more money into it every single month. So it's going to do an average, and then at some point it's going to go back up and it's going to be very profitable, right? And that is, to me, guys, literally the best way to invest money, right, during financial crisis, right, and during periods of uncertainty. But I would even say, right, all the time, it's literally to combine these three strategies, right? So to be a good trader and to get consistent results, to do dollar cost averaging, so constantly investing money on the markets and always have money on the side, so that if a market crash, if we get a massive down move, right, and we get a great opportunity, then you can, you know, aggressively get on this opportunity, and because you have liquid money and your money is not frozen into long-term investments, for example, right? So essentially, guys, that's the idea. That's how I do it, and that is literally what brings me amazing results. I hope I was able to share with you a lot of value, and I hope it was clear as well. If you enjoyed this video, please share it around. I would really appreciate it, and make sure that you leave a like as well on the video. And on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.